Let's take a look at some charts from the Monero data snippet regarding the bull trend. Now, I did an article on Monero a few weeks ago, and I did one of these bull trend possibilities, hypothecation, no, that's not the word, clairvoyance, whatever, prediction articles a few months ago. I wanted to revisit it because Monero looks like it's on its way to some of those targets. It's always good to refresh one's self regarding trajectory, potential sell targets, that sort of thing. So the first thing I usually look at when I'm trying to find potential targets isn't cloud or EMAs, it's Fibonacci extensions or retracement levels. So you can take any extreme high and extreme low, and you can project up or down depending on where price is moving. And you can pick an old high and a low, you can pick a new high and a low, you can mix it up, you can pick this high and this low. I generally stick to the most conservative targets because at a bare minimum, those are generally what you'd expect to hit. So if we pick this high and this low, we get a 1618 of like 135 and a 2618 of like 200. The idea is if price breaks this high, this local 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 high, if it breaks these levels, it should reach at the bare minimum its 1618 Fibonacci extension. It is unusual for price to reach the 2618 on the first attempt. It is more likely if we reconsolidate at the 1618 and then make another run and use the 2618. I don't see a lot of people using the 2618 or the 3618 or the 4618, but those are targets to watch for. You'll see it a lot on any parabolic move, up or down for ETH or any altcoin. I've seen it a lot for ETH. Just eyeballing this and this target, this might be the 3618 or the 4618. You can use those fib extensions as a gauge to how overbought or oversold you think things are. If price reaches its 4618 before reconsolidating, that'll certainly give me pause thinking that this is going to go higher because it's probably going to want to chill out sooner rather than later. It's going to want to retrace. It's going to want to mean revert slightly. It's not going to want to go straight up for the most part, most of the time. This is just a probability game. If this, then that decision tree situation. So we got fibs. This is one of the greatest examples that I always point to are anything chart pattern related. The idea is to catch this as the pattern is forming and then set your expectations accordingly based on the Fibonacci extensions. Again, this is the 1618 from the high to the low. And where does price pause first? At the 1618. It doesn't necessarily mean it's the very tip top high or bottom low. It can be, not always. Depends how price approaches it as it's happening. If this were to bear div underneath the 1618 or something and not actually reach it, Tezos is the most recent example. I don't have that up, but if you look at that chart, the 1618 for that specific situation was the exact top. And it didn't stay there for more than a few hours, if not minutes. Like it was the wick of a day. It didn't continue from there. So you sort of have to gauge your expectations accordingly. Another thing I like to look at is yearly pivots. These are calculated based on the highs and the lows of the previous year. If price is non-volatile, pivots will be tight. If price is volatile in the previous year, the next year's pivots will be extremely wide, which kind of makes sense. If price isn't doing anything, it says it's hard to predict price doing much more in the future. If price is super volatile, there's expectations in the future that it's going to be equally as volatile. Continuation. That's what this is generally projecting. So the current R2 value is at 170 and then 200. Again, that 200 level, it's a psychological resistance as well. We saw the 200 level on the 2618 of this fib here. So it's good to just go through the motions with all these targets, find your levels, put them on the chart, find the confluence. Where's most of this stuff lining up? It looks like 200 to me so far. And if we look at just historically for BTC, again, it's like a ladder. Price will attempt to break above or below. And if trend continuation is there, it'll keep going. It'll keep going past the R5. It'll keep going. Just look at Link, look at any of these parabolic moves on ETH. These levels don't mean that there are ultimate high, ultimate low, although they can be. Here's the S1 from 2018. More often than not, they are pit stops on the way up or on the way down. That's why they're good to look at. Doesn't mean 200 is going to be the top of this cycle. It just means there's probably going to be more resistance at 200 there. Another one that I've added more recently is the MA multiplier. Because Monero has so much price history, you can use the two-year moving average, the green line here, and then multiply that by 3x or 5x, whatever makes the most sense. You have to curve fit the back part. You have to curve fit the back part. You can't just randomly pick 10x to this 2-year MA and be done with there. The idea is you curve fit the sells and the buys to give you an idea of future price action, where price is overbought, where price is oversold. It's also, again, projecting that 200 level, 200, 210. Now, just as it did in 2016 through 2018, these means and moving averages will keep moving up so long as price moves up. So you can see this based on this indicator and these settings stayed overbought for a year and a half. Some people won't like that. Some people want to see exact tops, exact bottoms. It stayed oversold for a year and a half. But another way to read this is you get ready to sell once it crosses the MA multiplier, but ultimately you don't let go of the entire position until it breaks below the MA multiplier. Same thing with the buy side. For these settings for this pair, that's what I'd say is the most advantageous. So although this may reach 200, 210, you can't think like, oh, it's over, right? Again, the same principle with the fibs and the pivots. It doesn't mean it's necessarily the exact top at that exact moment. It just means you're probably going to find some resistance. It might slow down. You just have to gauge your risk, size, leverage, etc. accordingly. So if it can break 140 consistently over several days, I certainly expect 200 to 210 in short order. And here's Tesla. Some people think, I'm just making stuff up, or it doesn't work for gold, metals, equities, stocks, commodities, whatever. I just picked this as an example of something that was just way overbought recently. And you can see how previously it caught these highs. It catches these lows extremely nicely here. Very short time span that these lows are highlighted. Same thing as the top here. And you can just see how overbought this is currently. It's way more overbought than it was in 2013, 2014. This also highlights the range really nicely. This was, in this case, the exact high. This was very near the exact bottom low, at least on the close for the day. The candle probably wicked into the multiplier, or the moving average here. So if I see a chart like this in a vacuum, it makes me think, okay, this is overbought. I probably don't want to enter the position here. I don't want to enter with size here. If I'm holding any, I want to consider letting go of some of the position and or shorting, hedging some of my position because it's so overbought here. If we move on to another one of my favorites, the Pitchfork 3 points, create a trend channel with rules showing a rate of change as well as where price wants to live. Price wants to live on the median line in this brown area. Price is oversold below the median line way down here, overbought way up here. The trend is invalidated if price breaks below the bottom diagonal, and it's overbought once it's up here. There's not a lot of price history for this specific Pitchfork, but I wouldn't say it's not valid. It certainly fits price decently. The median line had some decent price reaction as far as just hugging there, acting like a magnet for a little while. So this projects 200s by maybe January, something like that. But if this wicks into this diagonal specifically, then that would give me caution for continuation from there, because that says this level is being respected. Previously it was resistance. It's X percentage away from the median line at that point. It's probably going to want to relax, retrace, consolidate, that sort of thing. And lastly, if we look at Wyckoff method, specifically Wyckoffian accumulation, you'll see variations of this stereotypical cycle. In this case, it was a year and a half, almost 2 years, right? Of this range, right? So you get this range bound stuff, and price reacts to various levels in certain ways. Most of it's kind of common sense. You establish a low, you revisit the high, you revisit the low, you revisit the high, and then you break the low, and then you revisit the high. That's essentially all it's saying. But when you see this accumulation pattern, you're assuming that there's eventually going to be a markup phase, a strong bullish continuation. And that's currently where we're at for Monero. And there's tons of examples of this online. If you've not heard of this stuff, there's some links in the article as well. And one of the best examples, which even I didn't know about Wyckoff accumulation in 2015, 2016 for BTC. But in retrospect, again, very clean. Selling climax, automatic rally, low, high, low, another low, high, spring, breaking all the lows, and then the slow climb and the eventual markup from there. So I'm definitely still bullish on Monero, as crazy as the run has been. I mean, look what happened with BTC again in 2015? Yeah, 2015. I mean, it was 2x plus from the lows, relaxed a bit, consolidated for 250 days, and then had the legendary run in 2017. So I think all that is still on the table for Monero. It looks good. 200 in the near term. Past that, it will depend on how the consolidation looks, for how long it occurs, if it's bullish, if it's a reversal. But the expectation is a bull trend with extensive markup, potentially for multiple months. And in Bitcoin's case, it was multiple years. I don't think that's common for crypto especially, but with Monero's inflation below most other coins, below 2%, I think it's like 2.1% or something. But its inflation is way below most other coins. So I'm definitely bullish on Monero from both a technical and a fundamental perspective.